Hi everyone and welcome back to the PlantStock channel. If we haven't met yet, my name is Jesse and on this channel we focus on plant-based stocks and companies. Recently, I released a video about Else, a disruptive plant-based baby, toddler, and children nutrition company. We took a look at the company's outlook and what their near-term future goals were. One of the goals was to continue innovating and put capital into expanding their R&D, and that is what we're going to focus on tonight, and how this might benefit the company and us as investors. We will also take a quick look at why the company's stock has dropped as much as it has the last week. But before we get to it, I would ask you to please subscribe to the channel if you want to continue to get news and analysis regarding Else and other plant-based companies. I would also appreciate an early thumbs up if you find some value in today's video, since it does help the channel to grow and reach a larger audience. Let's take a quick look at the stock chart. We're looking at ticker symbol BABY in the Toronto Stock Exchange. There's also an OTC version, which is in American dollars, ticker symbol BABYF. As I have mentioned before, this is a company stock that has 10x in just a year, which is an impressive growth. The stock has dropped just about 20% last week and actually more the last month. Personally, I wouldn't worry about it at all, since this is a growth stock and it is fairly new to most investors. It did go up a lot during October and November, since the company had a lot of interesting news going for them, one of them being that their products sold really well on Amazon. So why has it dropped so much the last few weeks? Well, no company stock has an endless rise. Sooner or later, it will fall down and make a correction. But part of the reason could be that there hasn't been that much news as of late, but also that there seems to have been a misunderstanding regarding insider trading. Luckily, this is something the CEO quickly clarified on Friday. Quote, Else Nutrition Holdings wishes to clarify the purpose of December 15th news release issued on behalf of Ms. Hamutal Yitzhak, the CEO of the company, announcing the filing of an early warning report required under Canadian laws. Ms. Yitzhak did not sell or otherwise dispose of any of the shares referenced in that report. Instead, the report related to a decrease in voting rights held by Ms. Yitzhak pursuant to a voting support agreement entered into in June of 2019 between the company, Ms. Yitzhak, and certain shareholders of the company. Ms. Yitzhak held no ownership rights or economic interest in the shares referenced in that news release, and no sale or actual disposition occurred. I do believe that was a smart and tactical move on the behalf of the CEO to clarify this situation, considering that this misunderstanding could have been why several investors pulled out. Before closing, the stock started to rise once again. Now, if we move on to other news, we found out in my last video that the company has $30 million cash at hand, which is very impressive considering the size of the company. If you want more information about that, make sure you watch my formal video on Else. I'll put it on the top right side of the screen. We learned that this money is supposed to be used for sales and marketing, trying to strengthen the brand, but also it was supposed to be used on research and development. And that is something that they seem committed to, if this article is any indication. Quote, the newly expanded team of Else's nutrition scientists and engineers equipped with the state-of-art new lab in the north of Israel. The team will leverage the company's robust intellectual property portfolio and will use the innovation lab to develop future portfolio products spanning infant, toddler, children, and adult nutrition segments, as well as other food category segments. The facility's capabilities facilitates robust quality control throughout the production process. That was certainly a mouthful, but the essence of this is that Else will now be able to produce new products based on their proprietary technology that they have already developed. Meaning they will continue to develop disruptive nutrition formulas to help them expand and become more competitive in their specific sector. And this is what the CEO had to say about this. This marks an exciting milestone in the next phase of our growth, expanding on our capabilities as pioneers in the plant-based nutrition space. This innovation lab will serve as a springboard of new products and for years to come, and we're looking forward to continue delivering novel, clean label, plant-based consumer solutions globally. In my opinion, this is a very encouraging sign. One of the more important aspects of a company in growth, especially a company that is disruptive, is their abilities to scale and keep reinvesting their money into the company. Else already has an advantage, an edge in regards to their competition. They are the only company that have infant formula products that are fully plant-based, soy-free, gluten-free, and on top of that, non-GMO and organic. And that they are now expanding their product line is to me a clear indication that they are here to stay and keep being a disruptive force. People, let me know down in the comments, where do you see Else in 5 to 10 years from now? As an investor, or if you are a potential investor in Else, I would feel quite pleased at this moment. There are always risks when investing in new disruptive companies, especially small cap stocks. They haven't had the chance to prove themselves and get properly situated. Yet this company, Else, is perfectly placed in time and space. We live in an information age where more and more parents want and need to find the most healthy food possible to nurture their children with. People are actually starting to read the labels of different products. They do their own research since they don't want their kids to act as potential guinea pigs. And on top of that, there are more and more young ones that do get a lot of sensitivities from day one. And one of several reasons could more than likely be the products that many of us have gotten inside of us over the years, never knowing the ramifications some of these ingredients could have on us or our offsprings. And furthermore, seeing it as the plant-based movement is here to stay, I can't imagine that Else could be more perfectly situated. Well, that was it for today. I truly hope you got a lot of value from today's video, and if you did, please smash that like button. And if you want to join the family, feel free to subscribe, as I will keep you updated on Else and other plant-based companies. As always, guys, remember, I'm not a financial advisor. These are just my own thoughts and opinions. Do with them as you please. I really hope to see you soon. Peace out.